Welcome everyone to the Vested Interest channel. This is Shane and this is our weekly portfolio update video. We do this every single Sunday. We are going to cover the $765 and change in new capital that I added to the portfolio, any dividends received, options I received or was in this week, what we purchased with that $765. And if you like this kind of content, if you could help out the channel, hit all those buttons down below, share with anyone you think that might find value in the content. Make sure you watch to the end. Watch time is one of the metrics that the YouTube algorithm looks at, and really do appreciate all of that. Let's get into the video here. All right, options. We did have a couple options hit this week. We did receive $33.94 total in options premium, and any options premium that I receive goes right back into the portfolio on the week that we receive it. We add it to our weekly cash, and it goes back in and buys some shares, sometimes of what we ran options on, sometimes of other positions. But the two options plays that we were able to get someone else to buy on the other end was the Johnson & Johnson, ticker J&J, out of the healthcare sector covered call here. -1 means 100 shares. You must own 100 shares to be able to run a covered call. That's what covered means. You cover the shares that would be potentially called away. And the expiration date was September 12th, which was Friday. We opened this on Monday, the 8th. $182.50 strike price. So that just means if it would have, the strike price means if the price of the stock would have hit $182.50 or higher, someone else was willing to buy those shares at $182.50, we would only receive the $182.50. So if it would have been $183, $184, $185, we lose that difference. But in this case, it was still lower than the $182.50. So we keep the shares and we keep the options premium, and we received 20 cents per share. After some fees, it amounts to $19.47. The next one up here, a -1 as well, so 100 shares of Kroger, ticker KR, out of the consumer staples sector, also opened on September 8th there, expiration date of September 12th, strike price of $75. So same thing, someone was willing to buy the shares of Kroger at 100 shares of Kroger at $75 or above. It did not make it to 75, so we keep those shares. We receive 15 cents per share minus some fees, amounts to $14.47. That's where the $33.94 comes from. All right, on to dividends. On September 9th, we received dividends from Johnson & Johnson, ticker J&J, $165.22 total. We do have the DRIP set on the portfolio, so that stands for Dividend Reinvestment Plan. That just means anytime a company in the portfolio pays out dividends, those dividends get automatically reinvested and buy more shares of that same stock. So in this case, the $165.22 went right back in and picked up 0.93324 shares of Johnson & Johnson. This 0.93324 shares adds an additional $4.84 in passive income over the next calendar year. And this right here is what, whenever you hear people say the dividend snowball effect or the compounded interest effect, this is what they're talking about. So we already owned shares of Johnson & Johnson. Those shares pay out dividends. Those dividends get reinvested. Those new shares, or in this case, fractions of a share, contribute additional passive income the next time the dividend gets paid out. That is the dividend snowball in effect. Obviously, that snowball will grow faster if I add to the position with new capital. But even if I don't add any new capital, it will continue to grow over time, and time is the hill that that snowball is rolling down. We also received some dividends on September 11th, $269.38 total in dividends. And that is after some taxes are taken out, right? So here we're going to run through this real quick. Valet is the position that paid out dividends. They actually paid out $322.37 total. Now, in my brokerage account, the dividends, once they're paid, if it's a foreign company like Valet is out of the material sector. This is a Brazilian mining company. If the company is foreign, excuse me, like Brazil is, they take out the taxes associated right away. So in this case, $48.36 was taken out of the $322.37 in taxes. So I don't have to worry about that. My brokerage account has already done that. And if you have any foreign stocks, you want to understand it. Are you taking them out, or does your brokerage account do that for you? Are you accounting for it at tax time? Or again, does your brokerage account do it at the time that the dividends are paid? Mine does it at the time that dividends are paid. So just make sure you understand which way your brokerage account handles taxes for foreign companies. And then once the taxes are taken out, the $269.38 goes back into Valet and buys more shares. In this case, 25 0.52155 more shares, and that adds an additional $18.50 in additional passive income over the next calendar year. So the next couple of times that Valet pays out, these 25.52155 more shares will add to, this 269.38. All right, so a pretty good week in options and dividends. Now we get into the new capital, or some of the new capital added on September 8th, which was Monday. We did go in, same day we ran those options plays, and added $285.12 to the portfolio. With those funds, we picked up 2 shares of Comcast Corporation, ticker CMCSA. Picked up those 2 shares at $33.56. This is one that's part of our September buy video. If you haven't seen that, check that out. But this one we're focused on for the month of September. And same with the next one. Union Pacific was on that list as well. Picked up 1 more share of Union Pacific, ticker UNP, at $218.01. And these shares, the $285.12, and the new shares picked up with those funds adds an additional $12.38 in passive income over the next calendar year. Went back in on September 12th, which was Friday, added an additional $480.76 with those funds. All of our weekly buys. So these are our weekly buys for right now. I think I mentioned in last video, at the end of the year, I may look at VTI and start being more selective of when I buy it. It might not be a weekly buy. Maybe it's every other week. Maybe it's just whenever it pulls back. But I'm going to continue to focus on SCHD, VXUS, and VTI right now, at least till the end of the year. And then at the end of the year, we'll see where VTI is and make a decision on what we're going to do going forward. But we picked up 3 shares of ticker SCHD, that Schwab Strategic Dividend Growth ETF. Picked up those 3 shares at $27.69. 1 share of the newest ETF in the portfolio, that's Vanguard's International Fund, minus the United States. That's what the XUS means, VXUS. 1 share at $73.11, and 1 more share to our Vanguard's Total Stock Market ETF, ticker VTI, 1 share at $324.59. And again, it doesn't matter what the price is whenever I purchase these shares. Whatever it is, I'm going to pick up shares, at least 1 share of SCHD, at least 1 of VXUS, at least 1 of VTI. I know there's 3 of SCHD. I try to do 2 to 3 usually, but at least 1. And this $480.76, the additional shares picked up added an additional $8.71 in passive income over the next calendar year. So total invested $765.88. Total passive income added this week $44.44. That's with the new capital plus the dividends that were paid out in the shares. Those dividends picked up as well. Quick run through the sector weights here. Communications makes up 9.62% of the portfolio. Consumer discretionary at 3.12%. Consumer staples at 8.28%. Energy makes up 9.43% of the pie. Financials at 6.48%. Healthcare, the largest slice of the pie, at 17.29%. You can see that this has really run up. I didn't, J&J paid out dividends. That was the only real addition this week. But the reason it's really run up is because United Healthcare is really starting to run up. So that is part of the run up here in the healthcare sector. Industrials makes up 6.04%. Technology makes up 15.19%, still in second place. Materials at 2.37%. Utilities at 3.40%. REITs and real estate makes up 5.71%. And ETFs makes up 13.01%. Eventually, I know I say this all the time, but eventually this will become the largest slice of the pie just by the nature of adding to those ETFs every single week. There's been a run up in technology and healthcare over the last week or so because of, like I mentioned, in healthcare, United Healthcare has run up, and in technology, Lam Research has really run up, and Google has run up as well. Over here to the right, you can see those same sectors, the percentages that match up to the pie, as well as the dollar amount allocated to each position, or sector as well. All right, here it is, the overall portfolio, and I do show this, as I mentioned in the beginning, every single week. I think it's important for those of us in this space to show our portfolio so you can see a real portfolio built out over time and see that we are not just talking about this, we are putting our money where our mouth is and investing right alongside with you into the market, right? I'm not a financial guru. I did not go to college for this. I do not have a rich uncle or aunt that showed me how to do this or got me started. I'm learning along the way. Sometimes I make mistakes. And if I do, you're going to see those mistakes. Things are going pretty good in the portfolio right now, so you're going to see that as well. And again, I hope this helps some of you out there to know that you do not have to have a financial advisor investing for you. You could save those funds or fees that you would pay someone else to do it and do it yourself. If you don't want to do deep dive into stocks, do a discounted cash flow analysis, look at their balance sheet, their income statements, listen to earnings calls, that sort of thing, that's fine. You can stick with the ETFs, right? Warren Buffett would recommend something that matches the S&P 500, so something like VOO. FXAIX is an index fund. VOO is a ETFs. There's many of other ETFs out there that track the S&P 500. So maybe pick one of those that you like. Fidelity has them. Schwab has them. Vanguard has them, right? All of the brokerage accounts out there typically have their own ETF that tracks the S&P, or index funds that track the S&P 500. I picked VTI because I like the total stock market, which include mid caps and small caps. S&P 500 is just the top 500 largest businesses in America, right? I also like VXUS, gives me exposure to foreign markets. And I like SCHD because it's right in line with my dividend growth investing strategy of holding good companies that grow their dividends over time, which is the strategy overall for my portfolio. But you could pick something like VYM, which is a very similar, or VIG, same thing. It's dividend growth ETF. So there's several of different ETFs out there. Pick one that you like. Maybe you want just a growth ETF like VGT or VUG. A lot of different ETFs out there that have different purposes. Some track the NASDAQ, some track the S&P 500, like I mentioned. VTI tracks the overall stock market. You pick what you like and then just dollar cost average into it, weekly, monthly, whatever your investing timeline is, and be consistent. And that's one thing I hope that you're getting from these videos as well. I do this every week because there's consistency in it, and that is part of investing. Unless you have a huge lump sum, maybe you won the lotto, maybe your rich uncle died and left you, or aunt died and left you a bunch of money, or your parents and left you a bunch of money, and then you can invest, a couple $100,000 or $100,000 at one time. But for most of us, we have a day job, we have bills, and we might have, I know I have a little bit more than some people to invest every week, but I make good money. I've worked my way up in my particular field, and my wife has a pretty good job, so we have a little bit more income to be able to play with. But I grew up in a double wide trailer. I did not grow up wealthy. I grew up, started working whenever I was 12 years old because I wanted a little bit of extra income because my parents were poor, and then learned how to manage my money. And that's another part of it. You need to be able to set a budget, know where your money's going so that you can understand what you need to pay down if you need to, pay off some debt before you can invest, or how much money you have left over to invest. And if you don't have a budget, you won't understand that. So that's part of it as well. But anyways, that is why I do this. Hopefully it helps some of you out there see that you can do it too. Investing is a process. It is a marathon, not a sprint. Again, unless you win the lotto or, a rich relative dies and leaves you a bunch of money, it's probably going to be a 20, 30-year investing criteria for you to get to that financial freedom. But if you don't start investing, you are not going to get to that financial freedom, and you're going to be dependent upon Social Security, or maybe you have a 401k through your company that you work for, and it'll still be 20, 30, 40 years before you ever retire. And you probably won't retire as well as you could if you invested on your own and created your own portfolio. And then that 401k that you have, or the Social Security, if it's still there, that'll be additional income on top of your investing portfolio. All right. So you can do it. Hopefully this helps give some of you out there the motivation or the confidence to see that you can do it. You don't have to be a financial guru or have a college degree in this, or a financial background. Regular people do this every day, just like I do. All right, all the positions in the portfolio under this column, total shares as of the close of business on Friday. All of these numbers will be as of the close of business on Friday. Actually, I think it was Saturday morning when I get in here and update these numbers. Current price of each stock. Market value here, average cost per share is here. This does include reinvested dividends. My purchase price, what I have into it, does include reinvested dividends. Total return here, whether I'm up or down, you're going to see it. And I think it's important to see individual positions as well as the ETFs. There are ups and downs associated with them. I know some of them are in red, a lot less than there have been in other times in the portfolio. Right now, still 4 positions in the red. Comcast being down the most at 13.95%. Pfizer second. Occidental still in the red slightly. That one was up here a couple weeks ago, back in the red again. So there's the ups and downs associated with holding individual positions. Valet still in the red, but that one's really run back up. But then we also have some that are in the green. AT&T still the biggest winner at 70.53% up. There's Lam Research. I mentioned that had run up. It's up 60.26%. Kroger's up 50%. Google's up 52%. Then you can see a mix of The rest of them, from 0.73 VXUS, which we just added, to around 30 to 70% up. What sector each position falls, whether they're a quarterly, monthly, semi-annual payer. Currently, we don't have any monthly payers. Current dividend yield, my yield on cost, portfolio weighting, and I do have a rule in the portfolio. I do not want any one position, and this does not account, or this does not is not applicable to the ETF. So VTI, VXUS, SCHD, I don't care how big of the portfolio position they are. But for the rest of the positions, the individual positions, I don't want any one position to be more than 10% of the portfolio. I do not want any one sector to be more than 20 to 25% of the portfolio. What's close right now? UNH, like I mentioned, has really run back up. It's at 352.51. So it's at 8.57%. So I won't be adding to that position, which I wouldn't be adding to at 352 anyway, right? I was willing to add to it under 300, really under about 285. And it's really run back up. So I'm hopeful that it continues to run back up right now at 8.57% of the portfolio. The other one, VTI, 7.09. Google's at 7.76. So nothing's really, 7.43 for Lamb Research. What's SCHD? SCHD is 5.88. So nothing really in danger of hitting that 10%. It doesn't look like anytime soon, except for possibly UNH. If it continues to run like it is running, it may hit above 10% of the portfolio, but we still got a little bit of room there. Estimated annual income in this column, dividend growth year over year here, and I do adjust this. When they adjust their dividends, I'll adjust the dividend growth year over year. Payment months, what month they pay out. Sometimes these will slip from one month to the other, especially companies that pay towards the end of a month may slip into the next month. And where a company sits at 15% of its 52-week low, you'll notice that is not applicable for the ETFs. NA, that's what NA stands for, not applicable. So it doesn't matter what they are, I don't care. But for the rest of the positions, I like to keep their average cost per share under 15% of a 52-week low. Or it lets me know when a company is under 15% of a 52-week low, hey, that's good to add to right now. That's when I like to add to positions. When they're under 15% of a 52-week low or right up against their 52-week low, even if they're above my cost basis, I am willing to add to those positions, right? So right now, Chubb at 278.11 is still under 289.98. So I could continue to add to this position if I wanted to. I think UNP right now is a little better buy, which is why I'm adding to it. I think Comcast is still down below my cost basis, so I'd like to bring that cost basis down. Same thing with Occidental and Pfizer. So I am kind of focused on some positions right now. But Union Pacific, for example, it's above my average cost per share at 209. So I've been buying at 216, 217, 218. I'm going to continue to buy, even though it's above my average cost per share, but it's below 15% of a 52-week low. So hopefully that makes sense. So total shares, 6,891.681 shares. Market value of the portfolio, $429,360.48. I have $360,801.19, including reinvested dividends into the portfolio. Total return up $65,559.28, or up 18.02%. I do not really focus on this. I say this every single week. It's nice to see that I am up in total return. But unless I sell out of all the positions in the portfolio, I don't lock in this total return. So that's why I don't focus on it. Portfolio salary, $1,087.21 per month, $250.90 per week. Per day, $35.74. Per hour out of an 8,760 hour work year, $1.49 per hour. Current yield of the overall portfolio, 3.039%. My yield on cost, 3.586%. And this is what I'm focused on. That's why it's circled in red over here. The dividends paid out from all the different positions in the portfolio continues to grow week over week, month over month, quarter over quarter, year over year as I add new capital, as the positions in the portfolio pay out dividends and those dividends get reinvested. And as those companies increase their dividends year over year, and it currently sits at $13,046.54, back over that 13,000 mark. Next stop on to 14,000 a year in dividends. I think we're going to reach that by the end of the year. I'd like to be over 14,000 by the end of the year and on to that $15,000 mark. But right now, nice to see, again, $13,046.54 in dividends over the next calendar year. Dividend growth year over year is currently sitting at 5.91%. I'd like to get this up a little bit. I am looking at American Express. It would be probably the next position I added to the portfolio if I'm going to add anything else. I would like a little bit of a pullback, but that is one that I am looking at heavily and considering adding to the portfolio if there's any kind of pullback in that particular space. All right, that's really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest channel. Drop a comment down below. Let me know what's going on in your portfolio. What are you buying? What dividends were you paid this week? What options are you in if you are in any? Are you selling any positions? I know some people are starting to lock in profits with the market. Again, bouncing off all-time highs every other week. I feel like sometimes multiple times a week. My portfolio certainly is hitting new all-time highs as well. So again, it's nice to see those run-ups. It does make it harder to find deals in the market. So let me know what deals you see in the market. Again, what are you adding to your portfolio? What are you buying? And if you are locking any profit on positions, let me know that as well. We'd love to hear from you and let me know what's going on in your portfolio. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. I do the Stock Pick of the Day video series Monday through Thursday, where we take a look at a stock that's pulled back on the day, run it through my screener, see if it makes it on my watch list. So if you have any suggestions for that video series as well, drop those down there and I'll add it to the list. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.